right, we're back on the other side of the break. Lowcountry Money Talk is coming at you with some great information for you to know for the new year.
Yes.
Whether it's good news or not, it's good information, right?
You need to be informed.
You need to be informed, and that's why we have the expert here. Phil Bloyd is joining us with Revolutionary Financial Group again. So, boy, it's so important to talk to you right now because there's so much happening, and I know our viewers, especially our retirees, are concerned.
Yeah.
We're dealing with inflation, already a big problem, right? Of course, there's a lot of volatility that we've been working through and talking through on the show, and looming tax increases.
Yes.
So it's getting people worried, right?
Yeah, I mean, it's been going on, it feels like forever.
Does, yeah. So what our blood pressure is already high. We're wondering, you know, of course, as we get closer to retirement, and certainly if we're in retirement, do we have enough money saved to get us through?
Sure, I get that a lot, Jessa. So, you know, one of the biggest fears that retirees have, do I have enough money to last?
Yes, that's like maybe the biggest fear.
Sure.
Yeah.
And now that everything costs more, right? We were talking about eggs a minute ago.
We
right?
were.
That seems to have gotten worse.
Yes.
So was it $5 or $6 for a dozen eggs?
I had to quit eggs. I just gave them up.
Sure. Well, that's an alternative, right?
That's right.
There's other things, but they cost more too.
Yeah, that's true.
So in the current consumer price index, you know, it came out at inflation year over year at 6.5%. That means 6.5% more today than it was a year ago.
Right. So that's not, you know, wherever we feel like the starting point is. This is just
it's on
2
top
LY,
of it,
right?
right?
Yeah.
So, and people say, oh, well, it's coming down because it was 7.1 or whatever it was, or 8 at 1.9. Yeah, but see, the problem is the way they figure it, though.
Yeah.
So we know that gas prices are down a little bit now, okay? And they're down because China, of over 1 billion people, has been shut down for about 3 years.
That makes an impact.
So now they're coming back online. They're going to need 3 million barrels of oil a day.
A day.
That we weren't using. So supply and demand, we spoke about that during the break. So right now we're in the winter, slow driving. So as we go into spring and summer, I would expect, you know, those oil prices, gas prices to go back up because of China's demand. And, you know, a big thing on the CPI going from 7 to 6.5 was because gas prices went down. Food prices, however, went up.
Went up, yeah.
So the things we were spending money on every day are more expensive than they were. So you really can't pay a lot of attention to 6.5. You have to pay attention to your wallet.
Right. Well, and for a lot of retirees, at least that I know, they don't spend really all that much time driving around. So
True.
if you've got groceries going up, okay, gas went down a little bit, yay, but groceries went up, and that you have to have that. That's a necessity.
If you don't eat, you will die.
That's a fact,
Pretty
right?
sure of that. Yeah.
Okay, so let's spend a minute here just talking
sure.
about how to deal with it. If you
Right.
can kind of wrap it up for us in this segment. If we are already retired, what do you suggest we do?
Well, first of all, we have to know where the problem is. So one of the largest risks to your retirement right now is still the inflation. It's still the volatile stock market. You know, it's up today and down tomorrow. You feel good, and then down, and you know, here we go again. So we're going to be dealing with inflation. The Federal Reserve said for years before we can get it back to the 2% level. So we need to develop in our plan inflation. We need to see where we're taking our income from, and can we adjust it? We don't want to take income from the stock market side of our portfolio at this time if we don't have to.
Right.
Now, we don't want to dig the hole even deeper.
No, not a good time for that.
So the first thing we need to do is we need to make a plan. So we want to make sure, first of all, we know how much we need a month. We want to be more efficient about where we're taking the money from. I know we're going to talk more about that a little later. But if you're listening to me right now and you don't have an income strategy, I'm going to say again, I'm going to invite you to call on my team, help you create a budget, uncover your main risks to your portfolio and to your retirement, learn about options for generating income in retirement. Your retirement could last longer than your working days, so it's very important.
Yeah, great advice. Really important time to strategize. Make sure you have a plan in place so that you can deal with these issues we're facing in retirement. So great time to take advantage of Phil's team. I know Rachel would love to talk to you if you are interested in getting a complimentary revolutionary income analysis.
Yes.
So they can make sure you've got a plan. We'll be back. How's that for a plan?
Great.
See you in a second.